Okay, so have you ever heard of a stock that like totally tanks like 80% down,
Oh, wow.
but then starts to show signs of a comeback?
Yeah.
Well, that's what we're looking at today.
Okay.
It's Medical Properties Trust, MPW, they call it.
Okay.
And they specialize in hospitals.
Interesting.
Yeah. So the big question is, with this, crazy 8% dividend yield,
Yeah.
is it actually like a hidden gem, or is it just a super risky gamble?
Right.
So we're going to be checking out this article from The Motley Fool from December 17th this year
Okay.
to kind of get into all that.
Sounds good to me.
So what do you think?
Well, it's definitely interesting because you've got healthcare, which is, always changing, and then you've got real estate.
Right.
So trying to understand MPW, you got to look at both sides of it, right?
Yeah, you can't just look at one or the other.
Exactly.
Yeah, for sure. And the article points out that a lot of MPW's troubles came from, like, their tenants.
Oh, really?
Yeah. So they had a couple of big ones.
Okay.
Steward Healthcare and Prospect Medical Holdings. And between those two, they were making like over 35% of MPW's revenue.
Wow, that's a lot riding on just a couple of tenants.
Right. That's a huge...
Especially in healthcare, right? Like, you never know what's going to happen.
Exactly. And that's kind of what happened. Steward actually filed for bankruptcy.
Oh, no.
And then Prospect, they stopped paying rent completely.
Oh, geez, that's...
It's like if you had two roommates
Yeah.
and they were like the ones paying most of the bills.
Right.
And then they just suddenly skipped out.
Oh, yeah, that's rough.
So what did MPW do? Did they just give up?
Well, they definitely didn't throw in the towel.
Okay, good.
They actually did a couple of things.
Okay, like what?
So with Steward, they actually fully replaced them.
Oh, wow.
Got new tenants in all those properties.
Wow.
And then with Prospect,
Yeah.
they restructured things.
Yeah.
And they even took back control of 3 hospitals in California because Prospect wasn't paying up.
Wow. That's a bold move.
Yeah, it shows that they're serious about this.
Yeah, they're not messing around.
They're fighting for their investments.
I like it. Okay, so they're actively managing things, dealing with the challenges, but how does that actually play out when you look at like their financial stability?
Right.
I mean, an 80% drop in share price doesn't exactly say, hey, we're doing great.
Yeah, true, but you can't always just focus on that one number.
Okay, so what else should we be looking at?
So they managed to raise $3 billion in liquidity.
Okay, and what does that mean?
It's basically like their available cash, right?
Oh, okay.
And on top of that, they paid off $2.2 billion in debt since early last year.
Okay, so they're taking steps.
Yeah, that's a really good sign.
Shows they're trying to get things back on track.
Exactly.
Okay, so they're taking action, but are they making the right choices? Like the article talks about how they've diversified their tenant base.
Yeah.
But what does that actually mean?
Right.
Are they just replacing one risky tenant with another?
Well, no, they're not just picking anyone. They're finding operators who are really solid financially and have a good reputation in the healthcare world.
That makes a lot more sense.
Yeah, this way they're less likely to run into those tenant troubles again.
Right. It's all about being smart about it.
Exactly.
Okay, cool. So they're thinking long term,
Yes.
making sure they have good partners.
Yes.
But what about that 8% dividend yield? That sounds almost too good to be true.
Right.
Is that something that they can keep up, or is it a trap?
It's a good question.
Yeah.
So to really get that, we need to look at something called funds from operations.
Okay.
Or FFO for short.
Okay.
It basically tells you how much cash the company is making.
So is that like their profit?
It's kind of like that, but it's specifically for real estate companies.
Okay, got it.
And even with all the problems they had, MPW still made $0.16 per share in the third quarter of this year.
Okay. And how does that compare to the dividend?
So their dividend is only $0.08 per share.
So they're making double what they're paying out.
Yeah, basically.
Okay, that does sound promising.
Right.
But I still can't help but be a little unsure.
Yeah, I get it.
What about the big picture? Like, is this a temporary thing, or are things actually looking up for MPW?
Well, that's a great question, and it's something we're going to dive into in the next part of our deep dive.
Okay, so we're going to be looking at their future prospects and all that.
Exactly. We'll see how they're handling the rest of their challenges and what kind of opportunities are out there for them.
Okay, I'm definitely interested to hear more about that.
Sounds good.
Let's jump right into part 2.
Awesome. All right, so moving on to the future.
Okay.
2025 actually looks pretty good for MPW.
Oh, yeah. Why is that?
Well, remember Prospect, the tenant that wasn't paying rent?
Yeah.
Well, they're selling their managed care business.
Okay.
And they're expected to get $100 million early in the year.
Okay, so a big chunk of change coming their way.
Right, exactly.
But how does that actually help MPW?
Well, it doesn't mean they'll just hand over the money.
Right.
But it definitely puts them in a better spot to start paying rent again.
Yeah, that makes sense.
It's like if you're struggling to pay your bills,
And then you get a big bonus at work.
Yeah, you can finally catch up.
Exactly.
Okay, so that's one less thing to worry about.
Right.
But what about those properties that Stewart used to have?
Ah,
It's
yeah.
got to take a while to find new tenants and get them all set up and start making money again, right?
Oh, yeah, for sure. It's not going to happen overnight.
Right.
But MPW has been pretty smart about it.
Oh, really?
How so? So the new tenants in those old Stewart properties,
Yeah.
they'll actually start paying rent in 2025.
Okay.
But it's going to be a gradual thing.
Oh, okay, so like a payment plan, kind of?
Yeah, exactly.
Right.
So they'll start with partial payments.
Okay.
Then by the end of the year, they'll be at 50%.
Mm-hmm.
And then finally, by the end of 2026, they'll be paying the full rent.
Okay, so it's like a slow ramp up.
Exactly.
I guess that makes sense for both sides.
Right. It gives the new tenants time to get settled.
Yeah, without having to pay a ton of rent right away
And it gives MPW a steady stream of cash.
while they're, recovering.
Exactly.
Yeah.
So everyone wins. Okay. And what about the rest of those Stewart properties?
Good question. So they're working on those too.
Okay.
Either finding new tenants or selling them.
Okay. So they're not just sitting around waiting.
Nope. They're actively trying to fix things.
I like that. So, okay, we've got improving finances, tenant issues getting sorted out, and a plan for making money. It sounds like they're doing everything right.
It does seem that way.
But what does this all mean for investors? Is MPW a good buy now, or is it still too soon to tell?
That's where things get a little tricky.
Okay.
It's easy to get excited about the turnaround and that dividend,
Right.
but you got to be careful.
So what should investors be thinking about?
Well, one thing is the overall economy.
Okay.
The article mentions rising interest rates.
Ah, yeah, I've heard about that.
It could make it more expensive for MPW to refinance their debt.
Right. If they have to pay more interest, that's less money for everything else.
Exactly.
Okay, so that's one thing.
And then there's also the healthcare industry itself.
Oh, yeah, like what?
Well, what if there are changes to healthcare regulations or how much insurance companies pay?
Right, that could affect how much money their tenants make.
Exactly. And if the tenants aren't doing well, they might not be able to pay their rent.
It's like a domino effect.
Yeah, it's all connected.
Okay, so you got to look at the whole picture.
Absolutely. You can't just rely on one article or one opinion.
You got to do your own research.
Exactly.
This deep dive has given me a lot to think about,
I'm glad.
especially about how to balance risk and reward.
Yeah, that's a key part of investing.
It is. And it seems like every investment has some risk.
Oh, definitely.
So you have to figure out how much risk you're comfortable with.
Right, and what your goals are.
Exactly.
There's no one right answer.
Yeah, it's all personal.
This deep dive is really just a starting point.
It's like a jumping off point.
Exactly. We're encouraging you to go further.
Learn more, ask questions.
Exactly.
Okay, so we've covered a lot about MPW.
We have.
But ultimately, it's up to each person to decide if it's right for them.
That's the beauty of investing.
You get to choose.
So what do you say we move on to part 3?
Sounds good. Let's do it. So we've really dug deep into medical properties trust.
Yeah, we really went for it.
It's been quite a journey from, big fall to signs of recovery.
Lots of twists and turns.
And yeah, it's kind of amazing what you find when you really start looking at what's behind a stock's performance.
Yeah, you got to go beyond just the numbers.
Exactly. So for me, what really stood out was MPW's resilience.
Mm-hmm.
I mean, they got hit hard by those tenant problems and all that debt, but they didn't just give up.
Right, they kept fighting.
Yeah, and it seems like they're actually on the road to recovery.
Yeah, they made some tough choices.
Definitely.
Yeah.
But it shows, they're committed.
Yeah, they believe in their business model.
And it also highlights how important due diligence is for investors.
Oh,
You
absolutely.
can't just look at a dividend or what happened in the past and make a decision.
You got to do your homework.
Exactly.
Yeah.
You have to really understand the business, the industry, the risks, the opportunities.
It's like detective work.
Yeah, and that's where articles like this Motley Fool one are so helpful.
Yeah, they give you that analysis and insight.
Help you connect all the dots.
See the big picture.
And even with all the research you could do, there's always going to be some uncertainty, right?
Oh, for sure.
Especially with healthcare.
Yeah, things are always changing.
You never know what's going to happen next.
And that brings up a really important question for our listeners.
Yeah. What's that?
How do you balance that potential for high rewards, like that big dividend,
Yeah.
with the risks that come with a complex industry like healthcare?
Right. Because there's always risk.
Always.
So how much are you actually comfortable with?
That's the key question.
The tough one.
It is. And it's a decision that each investor has to make for themselves.
Based on their own situation.
Exactly. But hopefully this deep dive has given you the tools to do that.
Yeah, we've gone beyond the headlines, looked at the numbers, and tried to understand the bigger context.
We've given you a framework.
To think about MPW.
And to think about investing in general.
And that's what's so important.
This deep dive is just the beginning.
It's about sparking your curiosity, getting you to ask questions.
Keep learning, keep exploring.
The more you know, the better decisions you can make.
Exactly. So as we wrap up, I want to leave you with one last thought.
Okay, like it.
What other industries or companies are facing similar challenges and opportunities?
That's a good one.
How can you apply what we've learned about MPW to your own research?
Because the world of investing is huge.
It is. It's constantly evolving.
So stay curious, stay informed.
And who knows, maybe you'll find your own hidden gem out there.
That's a great note to end on.
Thanks for joining us for this deep dive.
We'll see you next time.